The planned OPEC production cuts fueling an oil rally leading into the new year. Crude hitting a 2016 high just this week before pulling back on some supply data right now at $53.75 a barrel. But 2017 could bring more good news. Well, I say good news for bullish investors who want it to go higher. Joining us this morning is former Shell Oil President John Hofmeister. All right, John, so as far as expectations are concerned, do you expect oil prices to continue higher from here?
I do. I think over the course of the year we may see a $15 to $25 rise in the oil price, provided two things. One, OPEC sticks with its production cuts, which it really needs to do because they're not paying for all of their government expenses with the current oil price, even at 53. And the second thing is that demand continues to rise, even if slowly. But if we don't see more demand around the world, that could slow down that price rise.
Where do you expect new demand to come from?
Well, they're still selling a lot of cars in China, India, and other parts of the developing world. And I don't think Americans are driving any less. And so what you see is a continuation of traditional demand plus additional new demand. And it all depends upon the state of the world economy and also the state of geopolitics. Are geopolitics going to calm down and allow economies to work, particularly with maybe a Trump revival of the U.S. economy? So I think the signs are for an upward movement in oil price.
Wow. All right. Dominic Tavella.
Good morning, John. Dom Tavella. So we see the U.S. rig count now at a 10-month high, and that's not even talking about all the wells that have been shuttered and basically can be turned on pretty quick. So how long before U.S. production really starts to ramp up again and offset some of the Saudi cuts?
I think we'll see a slow increase over the course of the next 6 months. Banks are not yet ready to lend a lot of money into the U.S. energy sector. They're still hiving down their portfolio. There's still some very troubled loans out there from companies that really are just on this side of bankruptcy. And so I don't think there will be an immediate resumption of large growth, but I do think there will be some. And I think we're at, at about 670 or so rigs. Remember, we were at 1,600 rigs. And so we're still 1,000 rigs down, essentially, from where we were. But I do think we'll see a couple hundred rigs over the course of the year come back on, which will increase some domestic production, perhaps up to 1 million barrels a day.
And, John, we had a lot of the wells that were drilled that were capped. They just weren't profitable. At these higher prices, they start to become profitable, and they can come online pretty quick. What are your expectations there?
I think we will see a major effort, particularly in places like Pennsylvania, Ohio, Eagle Ford, to complete these wells and to go ahead and turn them into production before we start drilling new wells. So I think the industry has sort of a ready-made rapid return to production increase. But again, money's scarce and equipment is scarce and people are scarce. The industry's been through a tremendous downturn.
Also, John, thanks in part to the oil rally and industrial metals, commodities as a whole snapped a 5-year losing streak, seeing their first annual rise since 2010. Do you see that trend continuing, just commodities as a whole moving higher?
Well, if the global economy has any strength to it, and if the U.S. really goes on an infrastructure rebuild, and that may fuel rebuilds in other parts of the developed world, yes, we could see commodities coming back. But I think the commodity increase that we saw in the early 2000s, I don't see it happening like that. I think China doesn't really have enough demand to make that the way to turn commodities back into what it was a decade ago.
All right, so let's talk energy under President-elect Donald Trump, John. He's appointed Oklahoma Attorney General Scott Pruitt to head up the EPA and chosen former Texas Governor Rick Perry as his Secretary of Energy. First of all, what do you make of those picks?
Well, in the case of Governor Perry, who I know, he sees energy as an economic development tool. That's what he did in Texas. He was personally very supportive of oil company, natural gas company efforts in Texas during his tenure as governor. I see him carrying that to Washington as an economic development opportunity. With respect to the Attorney General in Oklahoma, I think he looks at a balance of energy sources. I don't think he's against anything in the renewable chain that I'm aware of, but I think he is also for the development of natural resources that exist in the geographic U.S. which I'm quite pleased that that's the case. I think we had a radicalism in the Obama administration which made no common sense, given that we're going to be using oil for the next 50, 60 years in this country. And Rex Tillerson knows that full well.
Yeah.
So I think we're going to have common sense rule instead of ideology and some kind of an administration that wished it were different.
John, it's not just about pipeline building either. It's about making it easier to explore and drill, is it not?
Explore, drill, get permits, get some sense of future opportunity. This on-again, off-again 5-year plan that we've seen the last 8 years has been very problematic for the oil industry, which thinks in 10, 20, 30-year time horizons. And if you don't know, even in the production tax credits for wind, we couldn't get more than a 1 year until a year or so ago, couldn't get more than a 1-year grace period to know what the tax system would be, even for renewable energy. So what we need is some sense of purpose, a longer-term vision. It would be nice to have an energy plan for the world's largest economy.
Right.
And so we haven't had that ever.
Bureaucrats who think they know better than business leaders.
You know, you go back to, I was sitting here and just looking at the energy plan that the president-elect has laid out. I mean, number one, make America energy independent, create millions of jobs, protect clean air and clean water. I mean, this is the message that he had out on the campaign trail that got him elected. So anyway, what are we going to see for gas prices then under President-elect Trump, at least in his first year, 2017?
I think we're working our way back to $3 a gallon, to be blunt. I mean, if we get the $20, $25 a gallon price rise in crude oil, I think that'll translate into roughly $3 a gallon, which is still a reasonable rate for most consumers, given their history over the last, say, decade or so.
All right, so you're predicting $10 to $15 rise per barrel of oil in the new year, is that right?
Upwards of as high as 25.
Okay, wow. All right, you got a wow out of Dominic over here. All right, John Hofmeister, thanks for joining us this morning, sir.
Thank you.
Good to see you.